morning, I'm Harriet Agbenyi. This is Business Morning live from Channels Television, your home for the news. And financial markets reopened today after a public holiday declared by the federal government for the celebration of Eid al-Maulud. We'll take a look at where the markets are resuming today. But a breaking news story coming from the National Bureau of Statistics has the office has released the new General Household Survey today. The survey was done in partnership with World Bank, Ministry of Agriculture and Rural Development. Now, it's a continuous sample survey to collect information on the labor force, unemployment and underemployment, including statistics on hours of work and employment earnings of these persons. In developed countries, this is used to track the number of people employed at certain times with regards how they are contributing to the economy. Of course, we'll chew those numbers in a bit. Activities also resumed today at the National Assembly. At the Senate last week, a draft bill proposing a new currency law that will give the Central Bank of Nigeria legal powers to set exchange rates, effectively rolling back the nation's 6-month-old free float, passed through 2 readings in the Senate and will be put to a public hearing next week. The bill, sponsored by Senator John Eno, is meant to repeal the existing foreign exchange legislature under which market rates are mutually agreed between counterparties and allow the CBN instead to decide those rates. This proposed law is separate from a draft amendment to existing legislation published last month by the Nigerian Law Reform Commission, an independent body, and the CBN Governor, Godwin Emefiele, at the last Central Bank MPC meeting actually mentioned that they were not aware of any reform to this particular law. But now the Senate has come out and said they want to pass a bill that will ensure the Central Bank has more powers on this particular law in terms of setting what the exchange rate will be. Now, this week, the President, Muhammadu Buhari, is... today, the president is expected to travel to Gambia on a state visit, but he's expected back before tomorrow, Wednesday, December 14, to present the 7.28 trillion naira 2017 budget to a joint session of the National Assembly. The proposed budget is about 19.95% more than the 6.07 trillion naira budget for 2016. Oil benchmark in the 2017 budget is proposed at $42.50 per barrel, daily crude oil production at 2.2 million barrels per day, and a Naira-dollar exchange rate of 290. Meanwhile, the Senate has said even though President Muhammadu Buhari will present the 2017 appropriation bill, they will not consider the bill until the 2017-2019 medium-term expenditure framework and fiscal strategy paper it is currently working on is passed. Also on tap this week, Nigeria Senate will hold a stakeholders public hearing on trade and investment issues today. The hearing seeks to repeal the Consumer Protection Act and in its stead establish a new Federal Competition and Consumer Protection Commission, as well as Competition and Consumer Protection Tribunal. The Senate public hearing will also push for an act to scrap the Nigeria Export Processing Zone Authority and replace it with a new Nigeria Development and Zones Commission. The public hearing will also look at new measures aimed against trade in counterfeit goods and protection of copyright and trademarks. So as of this morning, started getting out from figures from the National Bureau of Statistics talking about the household survey, but also expected this week is the inflation number, headline inflation number for November, as well as petrol and diesel data from the National Bureau of Statistics. As the recession hits hard on the economy, most economists and market watchers are expecting a further upward movement of inflation data from 18.3% recorded in October. And of course, those numbers we should be getting sometime this week. Also tomorrow, the Debt Management Office plans to sell about 95 billion naira, that's about $302 million worth of bonds, at its last debt auction for the year. Using the Dutch auction system, the agency will sell 35 billion naira of the bond maturing in 2036, 25 billion naira of the bond maturing in 2026 and 35 billion naira of the bill maturing in 2020. At its last auction in November, the DMO offered the same amount on all three tenors but sold about 5 billion naira of the bond maturing in July 2021 as against 35 billion naira offered. And 14 billion naira of the 2026 bond was sold as against 25 billion naira offered and 20 billion naira on the 2036 bond versus 35 billion naira offered. So in total about 39 billion naira was offered as against what was for the successfully completed for that particular auction as against 95 billion naira offered. So successful bids were allotted at marginal rates of 15.48, 15.98 and 15.94% respectively. And the central bank will hold a primary market auction on Wednesday with treasury bills worth 147.50 billion naira on the 91, 182 and 364-day bills issued, 48.10 billion naira for the 91-day bill, 29 billion naira for the 182-day bill, and 70.40 billion naira in the 364-day bill. So it's about 12 days left in 2016, 12 trading days that is, left in 2016. And at the close of trade last week, the equities market sustained a positive outing as the benchmark index rose 0.3% week on week to settle at 25,817.69 points. Investors' interest also remained centered on the shorter tenured treasury bills on the debt market side, and analysts expect the trend to continue as work resumes. So taking a look at those bills, we find that the bill maturing on the 16th of February 2017 had the highest activity from FMDQ's FMDQ OTC market with 17.10% discount high and a value of 37 billion naira. The bill maturing on the 19th of January had a value of 33.50 at the end of Friday's trade, with total number of deals coming in at 134. Now, for the bonds market, that also saw improved activity for the week just ended, as of course the market gets ready for the bonds auction that will be held today. So you can see the dated bills there, bonds there that were actually favored by investors. At the end of the trading day, that was for Friday, total number came in at 63 deals with a value of 7.10 billion naira. So quite a lot of activities for this week. What will likely be shaping investors' decisions? Chukwuma Anyanwu, head of research at GTI Securities, joins me to talk about this. Good morning, Chukwuma. Welcome back from a very long weekend. What are the headline issues that you think will likely have an impact on the markets this week?
Well, the deal between the OPEC and the non-OPEC member nations to reduce oil production in a bid to shore up oil prices is also something that will have material impact as far as investors in Nigeria and Naira-denominated instruments are concerned. So, yeah, I think in addition to all that you've highlighted, I think that will also play a major part in how investors will play Nigerian instruments.
Which segments in particular?
Well, for the equities market, like you pointed out clearly, a lot of people are still very short-term focused, and that is not far-fetched. I've always insisted that I think a lot of interest will be more on increased consumer spending. But for those people who still want to retain investments in the equities market, I think a lot of people are deciding to play short-term. And when full year numbers for 2016 are released, that's when we expect to see a massive resurgence of investors back into the market. And that will be largely driven by the fact that we expect that by then the 2017 budget should have been passed, we would have seen a stronger naira against the dollar because of the fact that we expect that by the fact that crude oil prices will go up more, that would give some boost to our foreign reserve and subsequently our defense, ease the pressure on the local currency. So a lot more activity for me will come in the first quarter of 2017. But for the end of this year, I think a lot more people will just take short-term positions in the market, Harriet.
That's for equities, but for the bonds market and for the treasury bill segment, of course, tomorrow the Debt Management Office will be holding its year-end bond auction, that's FGN bonds. And at times like this, you begin to see exit of investors from the equities market into the fixed income segment of the market.
Even with the fixed income segment of the market, I still think that the shorter end of the market will see larger interest from investors. And that will be largely because a lot of people are more interested for now in seeing how the economy pans out for the end of the year and the beginning of 2017. So the shorter end of the market for treasury bills and even bonds for us are more areas where we see a lot more activities. And I think that sentiment will prevail for this week as well.
Do you also expect to see low subscription for the tenors that will be offered tomorrow at the bonds auction? Remember, at the last auction in November, we had only about 39 billion naira as against the 95 billion naira that was offered on the 3 FGN bonds.
You know, Harry, like you pointed out, people will be focused more on where inflation will be for the November numbers. And I think that would play a key part in the sentiment that investors will show towards the new auctions. So I think we will see better clarity when the November inflation numbers are released. But that said, I think for now, a lot of people are still very, very cautious. And for the equity market, for the fixed income market investors, the focus will largely be on the November inflation numbers that will be released this week.
So for you, taking a look at all of the events and the information that investors will have to digest, are you bullish, British or bearish on outlook for the markets this week?
For this week, in short term, I'm optimistic. I think we've had some positive triggers for the market, so it will attract some short-term investors. So we would see some sprinkling of bullish activities, for the better part of this week, if you ask me my opinion. Then in the long term, I also am bullish. I think in the long term, a lot more clarity will come into how Nigerian economy will pan out. So in the short term, I'm cautiously optimistic. I'm somewhat bullish for this week, but in the long term, I'm very, very bullish about the equities market and even the fixed income market.
All right, Chukwuma, we hope we'll share the same sentiments with you when trade ends today. Of course, it's the first day after a long weekend to celebrate Eid al-Maulud, and there's just 4 days of trade. So maybe, just maybe, it will be bullish.
Just maybe.
Chukwuma Anyanwu, head of research at GTI Securities, there giving us his perspectives on what to expect from the markets. And of course, the markets resume today after a holiday to celebrate Eid al-Maulud. There's just 4 days left. But let's quickly remind you of the poll we've got running. So we're asking our viewers what you expect the federal government to do in light of developments in the global oil markets. A few weeks ago, the Organization of Petroleum Exporting Countries cut production by 1.2 million barrels per day, and just over the weekend, non-OPEC members also agreed to a cut. Now, as the President presents the 2017 budget to a joint session of the National Assembly, should Nigeria revise its $42.50 per barrel benchmark proposed in the 2017 budget? You agree? Disagree? Indifferent? None of the above. You know where to reach us on any of our social media platforms. You can also send us an email to businessmorning@channelstv.com. So that's our Twitter handle @BizMorning. You can also tweet @ChannelsTV. We're back in just a moment, and we're focusing on commodities, domestic agri-commodities, and of course the latest from the Nigeria energy market. Stay with us.